Morning, Steve Freed in Chicago with the morning grain comments. Overnight we had kind of a mixed trade. Still no clear winner in the President of the United States election, with 7 states still undecided. This will go on for at least another week, and then maybe there might be some legal issues that take it down the road even further. So still kind of making the financial markets a little choppy, uncertain. And as far as the grains are concerned, right now we're in the middle of a little bit late rally in the beans and meal. Corn is back to being unchanged, a little bit over $4, and we've got Kansas City wheat gaining on Chicago. As far as the news is concerned, I think that yesterday we saw one private crop estimate that came out with the U.S. corn and soybean crop lower than the USDA's October number and lower than maybe the trade had thought. This could tighten the U.S. 2021 U.S. corn and soybean supply and demand. We also note that many people are thinking that U.S. corn exports and bean exports might be higher than the USDA's numbers, and especially in soybeans, that would even tighten the situation even more. We're still dealing with COVID and increased cases and concern about food and fuel demand. But it seems like right now we're focusing on what is the size of the U.S. final corn and soybean crop as the harvest winds down, and what is weather and how it will impact global supply and demand numbers. Right now it looks like we're in a dry pattern across Russia, across southern Brazil and Argentina, and also we're in a dry pattern in the U.S. southern plains. So that might add a little bit of a weather premium in prices, especially for the soybean market. And there was a report out from the USDA attaché in China that China, because of the large supplies of beans that are coming by import and sitting in stocks, that they may actually take 95 million tons of imported beans, and that's less than the USDA's current forecast. Again, an increase in animal herds and the late planting of the Brazil crop could actually increase U.S. share of that, and so that's another issue that could tighten U.S. carryout. Finally, the funds are long, and they continue to hold a fairly large long position, especially in corn and beans and meal. And it doesn't look like they want to get out of those positions at this particular time. There is no reason, as long as the weather is dry in those key areas that I talked about, and as long as China comes back as a buyer of U.S. corn and soybeans. It's been 19 days since China has bought U.S. beans, and we feel that there is some more demand out there, especially for the January and February time frame, for them to buy U.S. soybeans. So we'll be watching any headlines concerning the election and the impact it might have on the financial markets and any carryover into the grain markets. We'll be watching to see if there's any new export demand coming, especially from China. And we'll be watching money flow to see if the funds want to hold on to these long positions as we go into the end of this calendar year. As always, these are my thoughts, not those of ADM Investor Services. Have a safe and profitable trading day, and remember, always treat people like you yourself would like to be treated.